tell me, Pankaj, if you were to receive large chunks of money right now to invest in, and I'm sure you do, yeah, where are these pockets wherein the valuations are reasonable, but there is promise of growth? Because there are a bunch of pockets in which valuations are reasonable, but for a reason. The growth is not there, the promise of growth is not there. Where is it that you see both reasonable valuations and promise of growth?
So, in fact, actually, we've been receiving significant amount of money from our investors all through on an everyday basis. In fact, last few months we have received our highest monthly flows.
Congratulations.
And we feel very confident about investing that money into the ideas or opportunities that we see. So clearly, IT, as I said, is one sector where we've been underweight for almost like 18 months, and now we're actually changing our stance and we're actually going overweight on it. Okay. Because we think that the slowdown that these companies witnessed in business is behind us. We're seeing initial signs of revival in IT spends from US companies, which are customers for these companies, and we find valuations in the sector very reasonably attractive because valuations have moderated over the last 18 months and so. Again, pharma is a sector which has been underdog. I touched upon it, and again, we like that. So we actually now, as we speak, we're overweight pharma in our portfolios. Apart from that, financials and consumption has always been a secular story in India. It's just about identifying the right names at that point of time. So we find good enough opportunities in both the sectors where growth continues to remain strong and valuations are reasonable, though we have made some changes in terms of our pecking order within the space. But given the wide choice that investors have because of so many companies in the sector, there's always, you're never short of opportunities within the healthcare, within the consumer and the financial sector. And apart from this, we have turned constructive on auto and auto ancillaries because last 2 years post-COVID, the space was somewhat constrained because of chip supply shortages and stuff like that. And now that supply chain is normalizing. And the latent demand in the whole auto sector continues to remain strong. Having said that, we are more inclined and to investing into companies which are on the right side of the technology curve, which essentially means companies within industrials which are focusing when it comes to autos, which are focusing on electric vehicles. And on top of that, we've discussed this in the past, we continue to remain super perma bull on India's internet story. So this is a sector which I'm willing to bet every penny of my money for the next 20 years.
Next 20 years. You're talking about the internet stocks.
Absolutely. I think India's highest wealth creation in any sector will happen in the internet sector over the next 20 years.
And there is now a wider choice than what was when the first debut happened per se, Pankaj. I'm trying to understand which subsets within that. Let's start off with the last answer first. Then I want to talk about IT and I want to talk about certain other pockets. But first, internet.
Let me give you a high-level perspective before we talk about this thing. Just think about it. 2003, India's economy was $500 billion in terms of size. Today, we are $3.5 billion. Our internet economy is $200 billion or a shade below that. We are saying or we are expecting by 2030, India's internet economy will be $1 trillion. Now, that's very significant. If India's internet economy is $1 trillion by 2030, I bet you internet as a sector will be at least 10 to 15% of the Nifty index weight, which today you don't have any internet company in Nifty index. And I think it will become 10 to 15% of the Nifty weight. So I think there will be a significant value migration, as we call it, from an investor's perspective, from some of the other associated sectors into internet sector. I think opportunities are very significant across the whole spectrum. I think fintech is the in thing now, and because consumers are using technology to drive their financial transaction, adoption is increasing significantly. And the more important thing is the next generation or the today's generation is born digital. So because during COVID, this young generation, they've lived their life digitally and that's become part of their lifestyle. So I think the future of finance is in fintech, and technology is making one access much wider and much more cheaper in terms of, and that's driving a significant amount of growth, meaning you see with what has happened with, and what a phenomenal job India has done with our digital public infrastructure. That's really accelerating our growth and we are reaping the fruits or benefits of that. So I think finance, the intersection of finance and technology, or as we call it, fintech, is extremely exciting. Meaning, I think 20 years out, India's largest financial sector market cap company will be a fintech and not a traditional bank. That's my view. So the next HDFC Bank is going to emerge from the fintech sector and not from a traditional banking sector. Likewise, the intersection of consumer and technology, where we as consumers, in everything we are doing in our lifestyle, we're adopting more and more technology. I think consumer tech is extremely exciting because consumer is going digital. And the consumption of technology or the adoption of digital is accelerating at a very rapid pace. So I think, again, that becomes very exciting. And then obviously there are players across B2B and SaaS players or platform players, which are enablers to all of them, and which will again play a very pivotal role because without that infrastructure, consumer tech or fintech companies cannot grow or scale. So again, those infrastructure providers will have a very pivotal role in the whole ecosystem.